Our chief guest, Dr. Kamau Thuge, the Governor of the Central Bank of Kenya, the members of KBA Governing Council, the CEOs of member banks, KBA CEO Raymond Molenje, colleagues from different banks, colleagues from government agencies and development partners, esteemed researchers, academics, and thought leaders, ladies and gentlemen, good morning. Let me join Raymond, apologizing for starting this late. It's bad manners for bankers to do something like this, but not an excuse. We're next door discussing credit guarantee scheme and setting up a credit guarantee entity owned and managed largely by private sector, and that will be by banks anyway. So it is important for us to set that agenda going forward. As I said in that meeting, Governor, if we believe SMEs are critical for this country, then we must put our money and we must put our skin in the game. And the way to do it is to make sure that that company comes to life, hopefully by end of October. Let me take this opportunity once again to warmly welcome you to this annual forum. I believe this event is essential as it brings our industry together to develop fact-based solutions that improve banking products and enhance customer experience. From the outset, I wish to extend our sincere gratitude to our chief guest, Dr. Kamau Thuge, for joining us this morning. The CEOs in the room will know that there is just shortage of time. And if we are struggling with time ourselves, you can imagine about the time for the governor. So Governor, we truly appreciate. Governor, that presence also for colleagues from different banks is important because they come here first in the first instance to hear from yourself. Many of them see you in different forums, speaking to particularly CEOs. I think this is a fantastic opportunity for a number of our colleagues here. Ladies and gentlemen, the conference is far more than just a calendar event. It's a critical forum where we confront difficult questions, share experiences, based insights, and shape the solutions that will define how our financial system fuels Kenya's growth. This year's theme, Banking and Economic Growth Dynamics, Navigating Risks and Leveraging Opportunities in MSME Financing, strikes at the very heart of our national economy. SMEs employ millions of Kenyans, contribute nearly 40% of our GDP, and are central to households' income and livelihoods. Yet, they do experience, in my view, the most challenge in getting financing. From a macro perspective, our progress is commendable. As an industry, we committed last October to supporting MSMEs with 150 billion Kenya shillings in financing every year, starting from 2025 over the next 3 years. As Raymond has said, I'm pleased to report that by mid-July, we had not only met but exceeded that target, disbursing slightly over 153 billion Kenya shillings. It is my hope that this momentum is sustained throughout the remainder of the year. Governor, I think if there is anywhere we get a challenge from every key stakeholder, and you've challenged us as well, is lending to private sector. And if we continue this momentum and with the turn of the numbers that you had reported, I'm sure we will get back, and our dream, Governor, is double digit. And that's how I throw banks under the bus. There is no space for us not to get to that double digit. It's not one institution, it's not CBK, it's not GOK, it is a collective. Because when businesses thrive, When private sector lending grows, we as institutions will thrive. So it isn't just for those businesses. It isn't for the nation. We're also doing for ourselves. So as we gather today, we cannot forget to mention some of the groundbreaking reforms that the industry has recently witnessed. For the first time, we have a market-determined benchmark that brings unparalleled transparency and fairness to loan pricing. Borrowers will now clearly understand the factors driving lending rates and the contribution of the individual credit history to the overall cost of credit. And it's good that Julian is here and is the one emceeing this event. Governor, this gentleman asks us very hard questions on these matters. But I think, and as we've agreed, it's a collective, isn't it? We want transparency, right? But we also want to increase lending to private sector. And if we have to increase lending to private sector, we have also to understand that those rates must be coming down. Now that is very difficult for banks, Governor. Because a few people keep asking me, Paul, so is it control of rates? No, it's not control of rates at all. We're just saying there's transparency because risk-based pricing brought that transparency. But we also have to transmit monetary policy decisions. And Kenya Bankers Governing Council has agreed we must work together. And it's been a fantastic working relationship to try and bring this to life. So I commend industry for working with the regulator to finally bring this to life. It therefore means the good repayment behaviors will be rewarded with lower rates, and long underserved segments like MSMEs, women-led businesses, youth, and persons with disabilities can access credit on a more predictable and equitable terms. We recognize that access to affordable finance remains one of the most significant barriers to small businesses. By adopting the Kenya Shilling Overnight Interbank Average, now called Kesonia, and embedding transparent risk-based pricing, Kenya is aligning with global best practices. Equally important, this reform strengthens the transmission of monetary policy, as I said earlier on, ensuring that the central bank's decisions on interest rates are felt more directly and efficiently by households and businesses. For us in the banking sector, these reforms are not merely about compliance, they challenge us to reimagine customer service, to improve in how we extend credit, support resilience, and leverage technology to include segments previously left behind. This is precisely why gatherings like today's are so essential. They provide the space to move beyond slogans and obtain evidence that drive decisions which cause sustainable transformation. Over the next 2 days, looking at the program, you will explore credit guarantees, digital finance, sector-specific needs, and sustainability-linked lending. You'll see how data from gender disaggregated dashboards to advanced credit scoring models can fundamentally reshape how we assess MSME creditworthiness. For me, the takeaway is clear. Our success as banks will be measured by how effectively we translate these insights into tangible actions. Let us pick up the compelling research evidence and use it to ensure that a small businesswoman in Gikomba, and I would say in Marsabit as well, a young digital entrepreneur in Kisumu, a farmer in Kitale, finds it more easier and affordable, right, and more predictable to access credit they need to thrive. As we begin, I encourage us all to engage in honest debates, collaborate openly, and keep our focus on the ultimate prize, a banking industry that serves as a steadfast partner to MSMEs and a dynamic engine for Kenya's sustainable economic progress. With those remarks, it is now my pleasure to invite the chief guest, Dr. Kamau Thuge, to deliver his keynote address and officially open the conference. I thank you.